Hi, I'm Ashton with the Stacey Sauer team.
Hi, and I'm Ryan Grubbs with the Mid-America Mortgage team here in Flower Mound.
And today we are going to be talking about how to choose the right loan for you. So I think a lot of people just think that all loans are like the same and that all you have to do is kind of figure out the down payment and everything else. But when somebody is actually wanting to start the home buying process, first thing they probably should do instead of going online and trying to figure out what loan would be best for them is actually call a lender, right? Because you can ask them all these questions.
Right. Yes, that's really where most people should really start the process, is trying to figure out, one, what is the best loan and the right loan for them, because of the fact that there are a lot of different options out there. Main things is trying to figure out, there's 3 tiers, like we kind of like to call it in regards to it, and that's credit, income, assets. So those 3 tiers right there are going to help us determine which loan is the right loan for you.
So let's say I call you, I want to buy a house. What are kind of the questions that I need to be prepared to answer?
So one of the big things that we like to kind of find out is, what is it that you're looking to accomplish? Okay, so obviously
I want to buy a house.
Yeah, right. So obviously you probably already got online,
Yeah.
and you've already started kind of browsing at houses and looking around on your own, and you've seen homes and you've kind of determined a price point of home that you're looking to be within. So one of the things we want to find out is, is there a certain price point that you're trying to be within? Okay, great. Now, is there a monthly payment budget-wise that's going to be comfortable for you that you've kind of determined as well? Because we want to make sure that we're getting you into a home that you're comfortable with monthly payment. Okay.
So when you say monthly payment, I have to ask this because property taxes have been a thing for me lately. I'm always like, man, they get me every time.
Yes.
So do you take that into account, like, hey, where are you looking? Because this is also gonna, if you're escrowing, or do you ask that right up front?
Well, whenever we're figuring monthly payment, we're figuring total monthly payment, and that's with taxes, insurance, everything.
Okay. So insurance on your home, because you pay that through the mortgage payment?
Correct.
Okay. So let's talk about the different types of loans. I think we're going to focus on FHA, VA, and conventional, because those are the 3 main tiers, right?
Correct.
Now, there are some specialty loans that if you don't, for some reason, don't qualify for those, there's other programs out there, correct?
Yeah, there's a lot of different programs, and again, that's why it's really best to call us, let us just talk, figure out what's going on with your exact situation, so that way we can make sure we get you into the right loan and put a game plan in place.
So that's why we work with Ryan at the Stacey Sauer team, is because we call him the problem solver, and he literally Ryan, we've got this person, they found the house, help us get them in there, because you usually are really good at problem solving and figuring out how to get that person in the home. So we really appreciate that.
Thank you.
So let's talk FHA. That's typically what most, first-time home buyers think that they should do.
Correct. So a lot of first-time home buyers, in past have always gone towards FHA. And the reason that they've gone towards FHA is that FHA offers a 3.5% down payment option, okay? But let's just say you're a first-time home buyer, and right now, especially in this market, we're just seeing interest rates are on the rise. I mean, we're still sitting at historically low rates, but they are going up, and it's inevitable. It's happening.
So we're looking at, before it was like 3.5%. Now we're back up to 4 or 5.
Yeah, right now we're like 4.5, 5, depending upon where you're at credit-wise.
But still amazing, considering they used to be like 7, 8, 10.
Right, and 5 years from now we could be there. So. Yeah. FHA is a great option because of the 3.5% down, but depending upon, again, where your credit's at, how much down payment you want to do, a conventional loan could be good for you as well, because conventional financing offers 3% down options to be competitive against FHA.
So if I wanted to do the 3%, so wait, conventional is 3% and FHA is 3.5?
Yes.
Okay, so why wouldn't I want to do conventional over FHA? What are some of the reasons maybe I couldn't?
So this is the main factor in the difference between conventional and FHA. FHA is a government-backed program. So when you're not putting 20% down on a loan, you're going to carry what's called mortgage insurance as part of your loan. The great thing about FHA, doesn't matter what your credit rating is, that mortgage insurance, a flat percentage on every transaction. But on conventional financing, depending upon your down payment and credit rating, that mortgage insurance is going to fluctuate. So for someone that maybe doesn't have that best credit scenario, FHA is going to offer a lower mortgage insurance option and a better interest rate versus a conventional loan.
which is ultimately going to affect that monthly payment.
Correct.
And what you can afford monthly.
That is
so.
correct.
Let's say my credit score is like a 620.
Okay.
And I want to do conventional. That means I'm going to be having a higher interest rate on that mortgage insurance.
Correct.
And now is that yearly, or is that how often does that?
So that mortgage
fluctuate?
insurance, it's a fixed percentage,
Okay.
and it's built into your monthly payment every month. Okay.
Okay. So let's talk about VA. Obviously, VA is for anyone that is served, correct?
Correct.
So with VA, you get 0% down.
Yes.
So tell me, what are some of the stricter points of VA, and why maybe it's not always the best way to go?
Well, and actually that's changing right now.
Is
VA
it?
is really trying to get pretty aggressive right now because they're really trying to help our veterans get into homes right now.
Yay.
So it's a great thing. The main thing that we need to understand though is that it is a zero down payment, but there are still closing costs that are involved in these transactions.
Okay.
So there is still money that they're going to have at closing. Okay.
So closing costs. What else?
Closing costs, money for your taxes and insurance, title company fees. And it just all depends on how all that gets structured as part of your contract.
Okay. So that would be where your realtor would step in and negotiate whether or not you're paying the title, and then
Correct.
some of those fees as
Yeah.
well at closing. So.
And the great thing though about VA though is going back to what we were just talking about earlier with conventional and FHA and having that mortgage insurance when you're not putting 20% down, is that VA with 100% financing, it doesn't have any mortgage insurance. They charge what's called an upfront funding fee, but that's just figured in as part of your loan. It's not a part of your monthly payment. So it gives you that great lower monthly payment, as one of the, things to benefit our veterans.
Oh, awesome. So what about talking about mortgage insurance with conventional and FHA? Does that stay with you the life of the loan?
So that's one of the big differences is that with FHA, the majority of it always stays with you for the life of the loan. So with FHA, the only way to get away from that mortgage insurance is going to be either by selling the property and getting out of the house completely or by refinancing down the road, okay? Versus with conventional, as soon as you hit that 20% or greater equity position in the house, you're able to get that removed off your monthly payment and not have to go back through a refinance process.
And so if I wanted to avoid the mortgage insurance altogether, I would just put 20% down if I had it with
Correct.
conventional.
Correct.
So then you wouldn't have to worry about paying that if you had that money down.
That is correct.
So tell me, if I call or if we refer someone over to you, and they know all the 3 questions that you were going to ask, like their monthly payment, what they want to purchase, kind of what are the next steps? Do you get a pre-approval over the phone? How does that work?
So basically, once we complete that, that's kind of us completing that pre-qualification phase. So that gives them the ability now to go out and work with the team. And
look at houses.
And
which
start
is the fun
looking
part.
at houses. That's the fun part. And
Yeah.
start making offers. But the next phase is what we really like trying to do is getting all the documents in and getting them into that loan approval process, because that loan approval process is a key part right now, especially in this highly competitive market. So that way they can be showing the sellers that, hey, we are serious. We are wanting to buy, and we're actually fully approved. We're not just qualified. We're approved. So we've kind of got an upper hand here. We can close faster than most people, and it gives them a higher chance of getting their offer accepted.
So let me just reiterate that you can get pre-approved and fully approved before
Correct.
you even find a house, which
That
is
is correct.
huge.
Yes.
Because especially like you said in this market with multiple offers, if you're already approved, then how many days could we close in if we are fully approved?
10?
10 days. So you
Yeah.
could have a 10-day closing period if everything worked out,
Yes.
and you could be in the house within 10 days because of that fully approved loan process. That's huge, guys. I don't know if you'll know how big that is. I mean,
Yeah.
not a lot of people offer that. So.
Yeah, and that's one of the key things, because especially think about it, you're getting ready to move, and all of a sudden now you get under contract on a house. What is the last thing you want to be doing? Digging for all your financial paperwork while trying to pack.
Yeah.
So that's why we highly encourage, let's go ahead, let's get all that paperwork in, let's get you into that next phase, give you the upper hand out there in negotiating, and let's get you into a home.
Now, when he says all the paperwork, there is a lot of paperwork involved. But I swear it's all worth it once you get those keys. So.
Yeah, it's absolutely.
So Ryan, tell us a little bit about your organization here. You said that you can close faster than most people. So how is that possible?
Well, so we are an actual direct seller and servicer for Fannie Mae, Freddie Mac, FHA, VA. So we are actually pretty aggressive in regards to how we do things, along with the fact that we are one of the only mortgage lenders in the industry right now doing the e-close process.
Oh, wow.
Okay, so your old traditional way of closing where you're at the title company for an hour and a half signing documents, we just had a client just finish up in 15 minutes today.
Wow, that's huge. And they actually probably got to read everything beforehand.
Yes. So they actually, yes, exactly. That's one of the big things is they get all the documents either the night before or the morning of. They're able to read and review everything. All their questions have been answered. So that way they can they sign most of all their documents electronically. They
get the moving truck, get the keys,
Yep.
and move in that day. That's
exactly,
awesome.
exactly.
So if y'all have any questions about how to choose the right loan for you, feel free to comment below with the loan that you're interested in, and Ryan will definitely reach out, either him or his team,
Yes.
and answer any questions you might have. Next week we will be talking about appraisals and how you actually have to buy a house, or you have to buy a house 3 times before you actually close. So we'll explain a little bit more of that with Stacey next week. But thank y'all for watching, and let us know if y'all have any questions.